Hi, I'm Keith McCullough. Welcome back. What I wanted to do today is preview our Global Macro Themes call, which we'll be doing on Thursday. Now, these are quarterly global macro themes. It's probably the most popular institutional product that our customers ask for and look forward to. And again, it's because it's the big stuff. It's the big stuff that we like to say you can't miss. If we're right on 2 out of 3 on these, we are very happy because we tend to think that these are not consensus type calls. So again, global macro themes. So let's just roll into them. I'm going to give you a quick sneak preview. The first one is called inflation accelerating. Now, if you look at this chart, which we're going to show you two specific things, which is the CRB index, which is the black line, and then the second line, which is the gray line, is the median year-over-year consumer price inflation reading. Put another way, consumer prices. And our call last year, interestingly, but maybe not surprisingly, is basically a reversal of that. Last year, we were calling for commodity deflation. Last year, we were bearish on commodities, specifically bearish on gold, bearish basically on CPI readings as well. Now we're not. Why? Because year over year, the rate of change is starting to move to the bullish side, and we think that this has some legs. So in other words, CPI readings could easily track back towards 2%, and people will be talking about inflation again. So that's the first theme. The second theme is called growth divergences. So again, when we think about this, we think about growth in the aggregate globally. We also think about growth locally. So what you can see on this chart, growth divergences means just that. One of these things is not like the other. So again, it's kind of like watching a romper room thing when you look at this chart, because of course that's what it is. Not all these things are the same. And at the end of the day, I think that's a major mistake that a lot of macro players play, or pretenders in the macro market, if you want to call it that. Everyone has a macro view, but they don't particularly have a process. The process here says that you're going to have divergences. In other words, there's going to be different things going on from a growth perspective across the world at different times. So the question here for me is whether or not Japan and the US can sustain, which were very good growth accelerations last year. And moreover, is Europe a more interesting place? Because as you can see in the chart, Germany is just getting going, which leads the Eurozone, which really hasn't even taken off yet. So on the margin, that's why we're more interested in European growth as opposed to US and Japanese growth in terms of an invested position. Now, the third one is called flow shows. Flow shows being money flows, stocks versus bonds. And I'm just going to boil it down that way as opposed to getting into everything like real estate and everything else. Just stocks versus bonds, meat and potatoes right here. Enterprise value of the world is about $210 trillion, which is a lot of dollars. And again, 67% of the world is basically on that score in debt versus equity. That is dramatically different versus 1999, where 50% of that allocation was in stocks and 50% was in bonds. So in other words, if you think about the flow show in particular, this could easily continue for a long period of time and frustrate bond bulls and excite equity bulls. Why? Because people need to sell bonds and they need to take that money and they need to put it somewhere. And if they don't put it in cash, they most likely have to push it into the equity market. Now, I'm not saying that that is going to be a fun kind of a bubble to traverse all of the time. But again, sometimes you can just buy the damn bubble. And we've been talking about that too. So again, we'll be talking about all these things on this Global Macro Themes call, which will be on Thursday. If you'd like access to it, please tweet me.